Dear friends, in this video we'll be focusing on three things to discuss in the course of this video using EURAUD as a case study. Okay, so the three things we'll be looking at to discuss is first, liquidity, using inducement as liquidity, engineered liquidity, these two. Secondly, would be draw on liquidity. Okay, so these are the three things. Is it three now? Yes, the three things we're going to be focusing on because of this video. All right, so I believe initially we've discussed on order flow, and we already know what order flow is. Basically the uptrend, the downtrend, ranging markets, the rest of it. It's not a very difficult something. And we also discussed the change of character. For example, I think it's in previous videos. If you go to previous videos, you find it. So we discussed the change of character, basically spotting it from a higher time frame entry, maybe daily or the weekly, as I like to take it. Then checking for drawn liquidity. Say for example something like this. Then there is a target to the upside. Alright, so this is a textbook diagram explaining. This is not really what I want to show on the chart, but it's a textbook diagram explaining what I'm looking at to discuss with us today. Okay, taken here as engineered liquidity, which is the first. Then inducement. Towards the end of in the course of the video, we will actually break these things down to a very understandable pattern or understandable topic. Right, then we have the inducement, and eventually we have the drawn liquidity. Drawn liquidity is basically whatever that happened between the previous day, if it's a daily time frame, previous day and the current day, or the past 2 days and the previous day, or in a weekly time frame, the previous week or the last 2 weeks, and then the previous week. I think you get the gist. All right, so coming down to this chart on Euro AUD, already we can see the structure, uptrend, downtrend, but in order to get this structure, well, let's go to the weekly time frame to understand from where and when we started taking our buys. So this is the weekly, and overall structure looks bullish. If you look correctly, overall structure looks bullish. But then I want to look into the drawn liquidity on this particular pair. Okay, drawn liquidity is basically, we have the sell drawn liquidity, that's the supply and demand drawn liquidity. It's basically for targets and stops. You can use it to actually identify where the market is going to go in a certain time, things like that. So this is the previous week's candle, and the previous week's candle is a bullish candle. Don't want to remove this out. If you look, there are 3 candles in between here: 1, 2, and 3. First is a sell, second is a buy, and third is kind of a long wick that left behind. You get towards the zone. Alright, let me clean this up so that you can see it. Okay, so cleaned off. So you can see the previous candle, that was this last sell. The next candle after it did not close below, and if it sweeps it by a week, it basically means that sellers are losing power and then the buyers are now in control. You get, so it was at this point that we started shifting in market structure from a downtrend to an uptrend. So this has been taken off. This is the first confluence that the market is already flipping over. Then we have also to the upside, we have this move where the market almost did close above, but it did not really close fully. But then the wick closed bullish Then this current week that we are in is currently in between the range of these two things that are happening now. I don't know if you understand, but I believe you should understand this. So that's 1, 2, 3. That's the drawn liquidity now. So basically, whatever we're doing is to take buys, okay? Unless you want to counter trend, unless you want to counter trade. So everything I'm doing now is take buys. That's to the upside. So this is the drawn liquidity first. That's the very first thing we need to observe. When you want to take a trade, first observe the order flow. Make sure you're on the right side of the market. And secondly, observe the drawn liquidity. Where is the market targeting and where it sits? Where is it like going to be swept? Where is going to be swept or something like that? Where is the stop loss? Where is the stop loss? So that is 1 and 2. And overall, on a weekly time frame, I'm actually targeting this high, but I know it take a long time in order to get there, and I'm not looking for swing entries or something like that. So I'll be stepping down on a 1 hour, on a daily time frame. On a daily time frame, and this daily time frame, I might actually want to do the same thing, identifying key levels. Okay, from the weekly now, I've identified my direction and then the draw on liquidity. The daily now, I would want to be identifying key levels. Where was the break of structure? Where was the change of character? Where was the fair value gap? The other blocks? Anything like that that will actually show me that yes, this is where the market is looking to bounce off from, or this is where the market is looking to continue from. All right. So this is the structure on a daily time frame. Okay. Yeah. This is the structure on a daily time frame. From this point, we have a fair value gap here. Obviously, when there is a fair value gap, I think we discussed hierarchy of entry models. Fair value gaps are one of the high ranking entry models. They actually overrank the other blocks. So when there is a fair value gap, you already know that yes, the market is going to react from the fair value gap, especially from a higher time frame. So this was the fair value gap the market reacted from and then took profits from this particular place. Then there was a retest and a couple of them. So this structure is not really very clear. So we want to go down to the 4-hour time frame, which is my major structure time frame. I like the 4-hour time frame because it shows me a clear chart. It shows me a clear chart that I can actually look at and know what's happening. All right. So on the 4-hour time frame, this is what's happening here. We have firstly a change of character here. Now I called it a change of character because if you look here, there was an uptrend, downtrend, then this was the last low. This low is actually the last low before this break of structure. But I'm not targeting this last low because it's kind of an inside structure. I'm targeting this one to be my change of character. So here I've observed this particular change of character, and then I have noted this engagement at this point. Many people used to have this rule that without inducement they're not taking the entry. You get this is because inducement is a type of liquidity. Actually, it's a very important concept in taking trades where it actually tells you that yes, the market is going to seek liquidity from that particular zone and then target the other block below it or a fair value gap, then bounce off from that particular zone. So inducement actually is a very important concept. So that's the inducement, and the market also looks for a liquidity sweep at this point. Okay, so if you remember the major thing that we're going to be discussing in this video, it's going to be liquidity, inducement, and drawn liquidity. So I'm just trying to point out the importance of these things and how the market is going to react to it and how you should react to the market conditions at that particular time. All right, so liquidity is a very important thing. I don't know, I don't want to overemphasize it, but you should know this already. So this first entry here was taken by liquidity and from an order block. Although if you are taking your entry from here, you will be swept, including from the fair value gap. it would eventually be swept because the market was seeking liquidity. Then in between, inside it is, what do you call it now? A retest, a bounce off, and then a sweep before a continuation, which is the engineered liquidity for this particular chart. This was a downtrend movement, and this was the last low that eventually tapped into this other block here. So it gave a little up. So many traders might actually take their entries from here and then set their break-evens or something like that, or bring up their stop loss or decide to drill stops, and eventually the market will come down and take them out. Now that sweep from that zone is called the engineered liquidity. When the market creates a low or creates a high that it's looking to sweep in further times in order to take liquidities or orders from there and then move. So that's the engineered liquidity right here, and if you can see the move, give a very nice pump, creating a new break of structure at this point. It created the first one here, created the second one here, but overall structure, it did create this break of structure here. Okay, so this break of structure now gives us first this engagement, then second an entry down here. Then furthermore, you will actually see that in this current price, the market is forming exactly what it formed here, which is an engineered liquidity and then a sweep in continuation. So let's progressively discuss that particular concept. All right, so this is still the 4-hour time frame, and we discussed the previous one, whatever it is that happened there. So from this zone, there was a change of character to the upside, because this was the last low. Change of character is when market takes out the last low that caused the last break of structure. So this was the last break of structure, and then this was the last low that caused it. So it was taken out, and the market reacted from a fair value gap. I think we discussed the mitigations. If we did not, I might still make a video on it furthermore. So this is a fair value gap that the market reacted to, and then give another break of structure, which is this place. So this fair value gap is already invalid. There is no way the market is going to come back to say it's reacting from this particular fair value gap. This is because if you look closely, there is another entry below here. Okay, there is another entry below here, and the fair value gap was one taken, and the entry is still unmitigated. And eventually, whatever it is that will happen between here, market is going to come back and mitigate this particular entry before it continues. So that was actually what I was spotting, that I said I was going to discuss with you guys. So this is the first change of character. I would like to take the second from here, because it's more clear at this zone. Then you can find a lot of internal liquidity here. This will be our first, which is the engagement, the last low before the break of structure. That is a pullback before a break of structure. That is the engagement. Then we have this internal range liquidity, and then we have the engineered liquidity that is being formed right now. This low, I'm going to say, is the engineered liquidity, because the low did not come down into this entry. The low did not come down deep into this entry. It just stopped at the tip. I'm not even sure it actually did tap into the entry. So this is the engineered liquidity, and eventually what the market is going to do is to drop down to first buy, actually first buy maybe at the market open on Monday, because today is Saturday. First buy, then mitigate this fair value gap, then continue. Then whenever it sweeps this low and mitigates this particular order block, this particular entry, if eventually it sweeps liquidity from here, then fine, people will take their entries. Or if people were swept, then the market will gain traction in order to move to the upside. But whichever way, this low is going to be swept, which is the engineered liquidity, and then the other block is going to be filled, and there will be a continuation to the upside. So there are actually a couple of things I'm looking at to happen in this trade. Instead, I take a very short-term trade, a scalp trade from this zone, that's a sell counter trend from this zone. Then I would sell into the normal overall order block that I'm actually looking to sell into. So it's either I take an entry from here, sell into this zone, then continue with a buy at this particular order block. I'm not going to actually take my entry from the tip because knowing fully well that the market is going to sweep this low, which is the engineered liquidity, I would want to be taking my entry from the middle of the order block from half, maybe 50%, so that whenever it is that the market sweeps orders, that is when I'm going to be triggered, setting my stop loss slightly below, which is at the invalidation zone, and then take profit at the external range liquidity. All right, so this is actually what I'm looking out for to happen in the coming week on Euro AUD. Now, the major focus again, I would recap, is the engineered liquidity. Markets do these things all the time. You can actually go and backtest and you'll find out that there will be a lot of engineered liquidity inducements and draw of liquidity. It's very important to know these things. It's very, very, very important to know these things because it will actually help elevate your trading journey. All right, so please backtest this particular strategy, backtest the inducement, backtest the draw on liquidity. Draw on liquidity is very, very important. You need to know it and then look into engineered liquidity. Thank you very, very much for watching and see you in the next video. Do also like and subscribe and leave us a comment of whichever concept that you're finding difficult and wants to be discussed. Thank you and see ya.